U.S. markets. Stock prices surged in August as investors cheered positive news of a potential COVID-19 treatment and welcomed a month-long succession of upbeat economic data. The Dow Jones Industrial Average rose 7.57%, the S&P 500 index climbed 7.01%, and the Nasdaq Composite soared 9.59%. Solid foundation. The month's foundation was set by a series of strong economic reports, including an increase in manufacturing activity, better than anticipated factory orders, and a lessening of new jobless claims. Notching highs. The S&P 500 index finally broke through resistance, ending the third week of August at a record high and completing the fastest bear market recovery in history. The Nasdaq Composite, having set multiple record highs during the same week, also ended the month at a record high. Strong close to the month. The final full week of trading was remarkable. Investors were encouraged by news of a potential COVID-19 treatment and a report suggesting U.S. and China negotiators had met to discuss trade issues. Stocks pushed higher still following announcement of the Fed's inflation policy shift, suggesting that interest rates may remain low for longer than expected. Sector scorecard. The majority of industry sectors closed higher in August, with gains in communications services plus 12.02%, consumer discretionary plus 11.48%, consumer staples plus 4.95%, financials plus 5.62%, healthcare plus 2.11%, industrials plus 9.98%, materials plus 4.89%, real estate 1.81%, technology 16.62%, energy lost 1.27%, and utilities minus 2.28% lost ground. What investors may be talking about in September. The election season is moving into high gear as November draws near. Will uncertainty about the elections be reflected in the stock market? Since 1992, the S&P 500 has lost an average of 2% in the 3 months leading up to the presidential election, but has been higher 43% of the time. Keep in mind that the 2% average includes the 20% drop prior to the 2008 election that was a result of the ongoing credit crisis. While past performance is no guarantee of future results, the lesson may be evident. Prepare for some short-term volatility without losing sight of your overall investment strategy. World markets. Markets overseas. Markets overseas generally trended higher, with the MSCI EAFE index rising 4.98% in August. European markets rose in hopes of a COVID-19 vaccine and another round of economic stimulus. Major markets ended higher, with France gaining 3.42% and Germany advancing 5.13%. The UK lagged a bit, tacking on just 0.7%. Pacific Rim stocks turned higher, with Australia picking up 2.24% and Hong Kong climbing 2.37%. Japan had a strong showing, adding 6.59%. Indicators. Gross domestic product. Second quarter GDP contraction was revised from 32.9% to 31.7%. Employment. The labor market continued to improve, albeit at a slower pace. Employers added 1.8 million jobs in July, and the unemployment rate fell to 10.2%. Retail sales. Consumer spending rose a lower than expected 1.2% in July. Slower sales of electronics and appliances were offset by an increase in restaurant and bar sales. Industrial production. Output by the nation's manufacturers, miners, and utilities rose 3%. To put that number in perspective, industrial production hit 8.4% in February. Housing. Housing starts surged in July, increasing by 22.6%. Existing home sales soared 24.7%, representing the biggest monthly gain since 1968, when tracking of existing home sales began. New home sales jumped by 13.9%, reaching their highest level in over 14 years. Consumer Price Index. Prices of consumer goods rose 0.6% in July, with gasoline prices contributing to the increase. Durable goods orders. Orders for products designed to last 3 years or longer gained 11.3%, rising for the third consecutive month, as defense aircraft and motor vehicle orders led the way. The Fed. Minutes from July's meeting were released on August 19. The Federal Open Market Committee appeared to favor more monetary accommodation, though Fed officials were unclear as to the timing or triggers for taking further policy action. In a prepared statement, the FOMC said the path of the economy would depend significantly on the course of the virus. In addition, FOMC members believe that the ongoing public health crisis would weigh heavily on economic activity, employment, and inflation in the near term, causing members to maintain the target range for the federal funds rate at 0 to 0.25%. U.S. markets. Stock prices surged in August as